Hello, I'm Robin Gibson, and this is the Harvard House Money Morsel. Welcome back. Thank you for joining us again. Don't forget to like and subscribe and click the bell so you get a notification of when we're releasing a new video. I'm sitting today again with Michael Porter. Hello, Michael.
Yeah, morning, Robin.
Michael, we've this last week we've attended a conference with our white label partner on the unit trusts, BCI, and we got to sit with a lot of our industry peers and hear on their perspectives. But let's maybe start with Trump and his orange swan. I mean, what's definitely clear, and we've touched on this before, is that there's a new world order in terms of how business is being done, isn't there?
Yeah, definitely, Robin. Yeah, we've talked about US exceptionalism, whether that's coming to an end. I think there's no doubt that it's coming to an end. I think that, if you look at the income growth and how rich Asian countries have become in the global South, I mean, there's definitely things that are being challenged. And, is all forgiven. I mean, markets have sort of rallied quite hard. Tariffs are there, then they get rolled back, and then we do a deal with the UK. And, there's no doubt that people are still worse off than before the start of Trump's second term, let's just call it, and the tariffs came in. But Trump's sort of playing this game, well, I'll put something draconian in and then we'll roll it back a little bit and we're still better off. But actually, it's going to cost the US consumer a lot of money. I mean, they're going to be paying substantially more for goods than they were beforehand. And I think the policy uncertainty and, despite Trump going around the Middle East now and making friends in Arabia, but there's no doubt that the US has got a huge amount of debt. It just comes up more and more and more, and I think this is becoming a bigger issue for markets all the time. Is the quantum of US debt? How much has to be refinanced this year? At what kind of rates? And whether the US is a good credit risk anymore. It's not to say that it's collapsing overnight, but I think when you've had so much of your money in the US, everybody's just looking at it and saying, well, surely I should diversify.
Yes.
And that can obviously be a self-fulfilling prophecy.
Yeah. I mean, one of the things that definitely came out is this idea, and it speaks to the gold run, is the idea that there's some diversification out of the dollar and US treasuries as the sort of reserve safety spot to I'll have some money in gold as my safety spot.
Yeah, I mean, I think central banks generally, Robin, I mean, the poor Bank of England, I mean, they'll go down in history as selling, a third of their gold holdings at the lowest gold price in 3 decades or whatever, whenever they did that, But central banks, I think, are realizing that even to hold other currencies and other bonds is not... gold is probably the ultimate diversifier, which it always has been in the history of global finance from the year dot,
Yes.
So yes, I mean, I think the gold price is sort of consolidating. It's come off its highs. There's a lot of volatility in gold prices and gold shares, but actually I think that I don't think that the need for gold has gone away, and I don't think that the demand for gold has gone away at all. I think people are realizing that things are quite highly correlated, and especially in a bear market, things are highly correlated. You don't think things are correlated, but they are when the wheels come off, and we've seen that before. And gold is a real hedge.
Of course, the thing to remember is that 70% of all gold sales is still for jewelry, isn't it?
Yeah, and there will be some shifting of jewelry from gold to platinum and other things like that. So we should expect that when the prices between the two are so wide, but yeah, I mean, central banks are just quietly wise central banks are just quietly building up gold reserves. India, China, Russia, all those countries are just quietly building things up, and I don't think any of these countries want to be beholden to the US anymore. And it's not going to be a quick fix thing, but I think if you had to plan a 25-year strategy, no one wants to be beholden to the US.
Yes. So one of the guys made a really fun comment, which we probably agree with, and said that South Africa is really just the cork bobbing on the ocean of world economic cycles.
It always is, Robert. It always is, isn't it?
Yeah. So bringing it back closer, obviously, I mean, we've got there's a few things happening at the moment. Obviously, we've got Ramaphosa, who's going to sit down with Trump, and the question is, are we going to have a Zelensky moment with Ramaphosa, which could be interesting?
That's interesting, Robin. And I was looking at some tweets last night, and I do take some of the tweets that I read with a big pinch of salt, because you never quite know. But Trump's been in the Middle East. The Middle East are big investors in South Africa. I mean, Saudi in particular has been a big investor down here for the last couple of years, and the UAE, and that whole area. And I saw some tweets which basically hinted that the Middle Eastern countries are saying to Trump, "You've been misinformed about SA. You're not hearing the full story," and that's why Ramaphosa's got a meeting with Trump next week, and it's a chance to tell the correct story. So I would say there's probably an element in there, but whether Trump believes that he's been misinformed or not, there is a chance for Ramaphosa to set the record straight. So are we going to have a Zelensky moment? I think it's possible. Trump is so unpredictable, you could have a Zelensky moment. I feel sorry for Cyril if it does happen like that. But I think more likely there's probably going to likely be a reconciliation. But because I think that's what Cyril's really good at. And if it was the whole ANC delegation going over, I think we'd have a Zelensky moment. But if it's just Cyril, I think this is where his real skill set lies. So we'll wait and see. We've got the budget next week as well.
Well, that's where I was going next. We've got budget 3.0, and of course the rand is looking very, very nice, Michael.
Yeah, Robin, I think we actually talked about it last week. The rand is at 18 to the dollar. This is actually, it just broke through 18 to the dollar before we came in here this morning. And it's the first time this year that's been below 18 to the dollar. We got to 25.5 against the pound. We're now below 24 to the pound.
Nice.
And I would echo the comments that we should be having a half a percent cut in interest rates next week or the week after when the Reserve Bank meets, And if not now, then when? Oil prices are low. The rand oil prices come right down. There's no inflation. The economy needs a massive boost. We talk about downgrading GDP growth generally, probably at Insight in a couple of weeks' time. And this economy needs a boost. So if they don't cut rates, what are they waiting for?
Exactly.
And obviously the budget will be interesting. I'm very much hoping that this budget is going to be a more growth-orientated budget. That focuses on trying to get some of the frontline growth going. But we'll wait and see. Let's at least get it over the line. Everybody vote for it. That's probably a good first start.
Well, I did see a comment that there definitely won't be a budget 4.0, so let's hope that is over the line. Michael, thanks. It's good to touch base on all those things.
Thank you, Rob.
Thank you for joining us. Don't forget to like and subscribe, and we'll catch you next time. Bye-bye.